Good morning, folks, and welcome to another one of my videos. I hope you had a great weekend and I hope you are well. So I have four pairs on watch today. Those are Euro dollar, Kiwi dollar, Aussie dollar, and dollar yen. Just to say that I took a loss on Friday on Kiwi dollar, and I'm going to, as we get to that pair, I'm going to break that trade down for you and give you what I think will be a very important lesson as we get to that one. So without further ado, let's break these down because this is going to take me perhaps a little bit longer because I want to talk about the trade and we've only got 20 minutes on these videos. So let's get into it. Euro dollar, why am I looking at this pair? The higher time frame narrative as I see it is that we have this 1, 2, 3 touch structure which taps into the last line in the sand, the last exchange of liquidity that I can see on my chart, giving me a clue that longer term we could be heading to the upside, especially since we have this impulse correction continuation. We tap into that area by way of a 1, 2, 3 and we push up and we get the continuation. However, that doesn't mean that we can't capitalize on a potentially shorter term move to the downside in the meantime, especially since we have tapped into this area of consolidation, this sharp hook point by way of a 1, 2, 3 touch structure, a 1, 2, 3 wave move, which just so happens, if I drill down, to have a 1, 2, 3 last leg. So just because we see a 1, 2, 3 leg, it doesn't necessarily mean that we're headed to the downside, but what it does usually mean is that this is a completed pattern. So whether in such instances we get something like this afterwards is another matter, but this, if I can just get rid of that, this in itself implies a completed three wave move. So, but when it lines up with a 1, 2, 3 wave move, which just so happens to line up with an area of liquidity, that's a good clue that this 1, 2, 3 move might be once it's finished, that we could see a move to the downside. Okay, so what typically happens at these daily highs is that we catch people the wrong side of the market, so people start buying above the highs and then price comes crashing down. So this is a textbook structure as far as I'm concerned, a textbook setup. So we tap into that area, this all makes sense to me, and then we start pushing down aggressively. And what I'm potentially looking for is a move down to complete this area here, what we call the 90% rule, the start of a piece of structure. And one of the things that I like is that the base of this, the 90% rule of this structure, happens to be a near miss to this sharp hook point as well, giving me a clue that there's potentially still liquidity in that area. Okay, and that this potential move to the downside, which I will be looking for today, may take out that low as well. So this is just an additional positive confluence factor. So as I drill down, I'm asking myself, am I well positioned for that move to play out? And the answer is yes. We're sat below this trend line now. We've had a clear intention from the big players, solid move down. The sequence is good. The sequence of flags, I can separate the structures as I've done here. This is a bit of a corrective wave, but the sequence nonetheless is good, and we're trading below all of this volume. So we could potentially use this volume and the volume that's building up to capitalize on that move to the downside. So the next thing I'm looking at is the entry, and what I will be looking for here is, if we just hide that a second, what I'll be looking for is the following. So if we tap into, in my opinion, we have this very clear, we have this sharp hook point. You'd see this more clearly on the 15-minute if I drill down to that, but we have this sharp hook point, we have this 1, 2, potential 3 touch move, which just so happens to line up with this 1, 2 potential 3 touch move. Okay, now what we may do is we may come down here first before pushing up. That's a possibility, and if we did that, this likely wouldn't be ready by the end of the day. But and often I cut through these volatility wicks, but if they make sense structurally, so if they happen to, a lot of the time these wicks are just volatility wicks, but if they happen to line up with structure, and we know that price tends to move in a parallel manner, then I'm more inclined to see this as part of the structure and not necessarily a volatility wick. So with that in mind, if we push up to this area, we would have a 1, 2, 3, which lines up with a 1, 2, 3, and that to me would be very intentional. So if that was to happen, I would be looking for a risk entry from the top with the criteria stipulated here. I would wait for given that this is a 4-hour structure, I would wait for the body of the candle of a 4-hour candle to close at this area of value, and that would then give me permission to drop down to the 1-hour chart. And what I've just said will be crucial when we get onto the next pair, and I shall understand why when we go into the trade recap. If we just blast to the upside and we don't stall in this area, then I will be waiting for the push down and the flag. Or if I happen to miss this entry, I'll be waiting for the push down and the flag, and then I will look to get short either within or on the break of the flag, and I will be able to manage this. We could put this here now because that's kind of the first inflection point. I will be able to manage both of these positions down to this area for something in the region of 3 to 4%. So I have an alert set just below the area of value. If it doesn't trigger, I will not be looking at this pair again today. So that is euro dollar. So Kiwi dollar, what we're going to do first is I'm going to zoom out to the higher time frames, and I'm going to hide the forecast is already hidden. When we get down to it, I'm going to put the trade on the chart. So I was looking at this one because we do have a near miss up here, but as I've said before, these near misses to take out highs which are close to them or lows often don't get filled straight away. We also have a near miss, and one of the reasons that might not be filled straight away is because we also have a near miss down here, which narrowly missed that one. Okay, and we have it's not the greatest sequence from this point on, but we have this impulse down correction continuation. We're trading below here. That gives me a clue that this consolidation and these two rejection candles here, we're likely to see them move down to take out this near miss before taking out that one there, okay? Especially as we consolidated below here, implying that there wasn't enough liquidity here to send price to the upside, okay? And we have this one, two, we come up to fill the wick, but we kind of near miss that. We take out the high, and then price pushes down. Then I'm looking at the sequence. This sequence looks pretty good, pretty reliable. Tight flags into larger flags, into tighter flags, into larger flags. That's a typical sequence that we see a lot in the market. What I'm going to do ever so quickly is I'm just going to hide this. You have to be fairly quick with these videos. I'm just going to hide that a second, and I'm just going to have where's that other one? Right, yeah. Okay, I'm going to put the trade on the chart. There's a real key lesson which I think will be important here. I'm just going to drill down. This is how I had my structure. If I just do the bar replay tool a second. So this is the trade. This is the trade I took on Friday. We had this 1, 2, 3 touch structure which tapped into this area, and that is typically, this candle here is typically a washout candle. Now I cropped through the wick. If this was a bullish wick, I would have had my stop loss above the candle, but since it was a bearish wick, whoops, I've just knocked the microphone. Since it was a bearish wick, I did what we call stop cropping. This is where you cut through the wick, and I managed to get my minimum stop loss, which is 10 pips, as you can see there, right? And when that candle closed, I got short. Okay, so this is really as a textbook setup, other than for one thing. Okay, and that one thing which I forgot. So this was a psychological error, is that when I got short, you can see if I just leave this on, the body. Remember what I said on the previous uh, pair, that the body of a 4-hour candle hadn't closed at my area of value. Okay, so this was the previous 4-hour candle that did not close at this area of value. So technically speaking, I didn't have permission to go down to the 1-hour chart to look for entries. And the reason that's important is because if the body of a 4-hour candle doesn't close at the area of value, price will trickle around for a while before it drops. Typically speaking, okay. So let's play out what happened. Price pushes down. It stalls in that area, and then it drops. And if we kind of look at when did it start to drop, it started to drop at 3 o'clock, so after the close of the next 4-hour candle. Okay, so with that in mind, where are we here? So that was 2 o'clock, right? So that would have been when the 4-hour candle closed. So if we just go back to the previous 4-hour candle, if we can actually get there. Okay, it's not working for some reason. Right, there we go. If we look at the next 4-hour candle, look what happened. Okay, so price got at the body of a 4-hour candle. We had that close here. Price stalled around for a bit. So technically speaking, I wouldn't have had permission to go down to the 1-hour chart until 10 o'clock. Okay, so where's 10 o'clock? So we get to 10 o'clock, which is there, and now there's no entries. Okay, so this would have avoided a loss. That's why it's important to utilize your timeframes correctly and have a proper proper methodology when it comes to timeframes, because you can see that after we got that stall on the 4-hour chart, a little while after is when price actually drops. So that was a loss. And so the next thing I asked myself is, why did that potentially happen, right? Is it the strategy that just doesn't work? Well, no, because technically I didn't follow one of the rules, okay? And I'm just going to put all this on the chart to show you what I'm looking for today, because the structure has changed. But if I just drop down to hit, this is my trading documentation. I don't normally do this. So I've documented the trade. And then, as you can see, what I've done here is I've written, is there anything else I would do differently? Yes, in retrospect, I wouldn't have placed this trade because the body of the 4-hour candle, which closed just prior to me getting short, didn't close at my area of value. This meant that I didn't yet have permission to drop down to the 1-hour chart to look for entries. And I think this error of judgment occurred because I felt tired when I placed this trade, and only at a 6 to a 10 on the flow zone scale instead of my 7 to 8. What we do, those of us who trade the Falcon strategy, we track our mental state, we track our flow zone. Okay. And so why did this occur? Most likely because I experienced some rare bad dreams before I woke up, and therefore had a less restful sleep. And the only thing about my evening routine, which was different the night before, which may have caused this, is that the last thing that I did before I went to sleep was go on my phone, which is something that I never do. So before you start writing off your trading strategy, and jumping from strategy to strategy, which is what a lot of failing traders do, is it actually the strategy that's failing, or is it actually you? Is it your mental processes? So one of the things that people find difficult, and in my opinion, whether this is popular or not, one of the things that people find difficult is admitting psychological mistakes. And I think personally that's one of the reasons why, although there's not many of them, why a disproportionate number of women do well in trading is because they can drop their ego, they can leave it at the door, and they can admit when it's them that's the mistake, that's doing something wrong, rather than actually their trading methodology. So by tracking your flow zone, you know what mental state you feel like you're in, or of course it's a subjective thing, but by tracking your flow zone and by tracking things like, what did you do either on the morning of or the night before you placed the trade? Was there something different that you don't normally do? If you're consistent with your processes, but when you're making mistakes you happen to have done something different within your processes, then you can track that back. You can go back through your data if you're tracking it, and then you can find out, was there something I did different, or is there something that I and if you're doing something consistently and your trades are consistent, then obviously it's not your trading methodology that's the problem. But anyway, I'm going to just go into what I'm going to be looking for today. So what I'm going to be looking for today from this pair is the following. You can see we've pushed a little bit higher. We may be tapping into the back end of this structure, but if we push down, you can see there's a lot of momentum in this move. But we have that 1, 2, 3, which taps into, just to touch on it, we tap into an area of consolidation which is sat just above where this move started. So there may be a lot of liquidity there. If this just keeps blasting to the upside, then so be it. But once again, on the 4-hour chart, well, we have actually had, this is different. We have actually had a 4-hour candle which is closed at the area of value. So I do have permission now to look for entries on the 1-hour chart. But there is no entry at the moment. Okay, there's no rejection. We've broken above this. We may be tapping all the stop orders and limit orders which were above this consolidation. And with that in mind, if we push down and get the flag, then I will be looking to get short either on the break of or within the flag. And you can see that I would be able to manage it down to these lows. So I have an alert set just below this ray line to see if we can push back down. And if it doesn't trigger and we push all the way up to here, for example, then this correction, even if we tapped into this area, would be disproportionate to the move down. So I would not be interested. So that is Kiwi dollar. So I need to speed up a little bit now. So similar picture with Aussie dollar. So this doesn't need too much time. I don't know why there's a right. Hold on a sec. So on this one, as I see it, we tapped into this area. We push down. We get the impulses and corrections. Okay, we then get this separate structure to this one. We tap into that area, and then we get a nice sequence of corrections. The corrections typically get larger as we go down. Once again, we've stalled below here and corrected below here, giving me a clue that there was not enough liquidity here to send price to the upside to potentially form a 1, 2, 3 in this area. So now I'm drilling down, looking for entries. So am I well positioned? Yes, I'm well positioned. Price didn't necessarily find enough liquidity here to send it to the upside, which is why it kept coming down. And it didn't come down in the form of a descending structure, which is typically a reversal structure. It tapped into this area and moved up in the way of an ascending structure, which is non-progressive price action to those of us who trade the Falcon strategy. Now, so what I'm going to be looking for on this one is the following. Pretty much the same kind of setup as with Kiwi dollar. We have that area of consolidation sat on the 15-minute chart, just as with Kiwi dollar. And you can see we may be stalling in this area. We may be tapping the back end of this as well, this area here. And as I've said previously, a lot of time these structures confuse people because we get this kind of 1, 2, 3. It breaks out of that. People think it's going long, but it taps into another. So they're potentially trading into an area of liquidity, and then of course a lot of the time price comes crashing back down. So similar thing, I'll be waiting for that push down and the flag, and then I'll be looking to get short on the break of the flag or within it. And as I've said before, a lot of the time these moves down come down with the same level of aggression as they came up. So when price gets to these areas of value aggressively, I quite like that, because typically speaking, the bigger they are, the harder they fall. The more aggressive they come up, the more aggressive they come down, which makes obviously management easier. So once again, alert set just below that area of value. If it doesn't trigger, no trade for me. And so what have we got left? So dollar yen. I was just thinking about something else. Now this may not shape up. We shall see. This one is slightly different. So on the higher time frames, we have. It seems clear to me from this that this is not the greatest sequence. This is why it's last on the list. But we've kind of, it's quite clear that we're moving out. We've moved up so far. We've retraced like 80% of this move down. And that gives me an indication that we're perhaps moving up to take out this high. And of course, if I just drill down, we have this, we can see this. It's not the greatest sequence, but we can see the impulses and corrections. We corrected above this high, which is important. It means that there was potentially not enough liquidity here to send price to the downside. And then as I drill down, you can see we have the 1, 2, 3 touch structure, the tighter flags leading out of that. And then we have this correction above here, which taps into it. And we move up multiple times, which tells me that there's potentially not enough liquidity here to send price to the downside. Okay, so speeding up ever so slightly, we then have this 1, 2, 3, which taps into this area of consolidation here, and you can see we may be tapping into this area as well, but you can see we've got there very aggressively. So what are we looking for today is the following. I'll be looking for that push back up. You can see we've pushed lower. I'm going to set an alert here now. I'm going to put an alert there. I'm going to cancel this one here. Whoops. I'm going to cancel that one there, and I just want to see if we get an aggressive push up. Once again, on the 4-hour chart, very important. There's a lot of momentum. There's no stall in price on the 4-hour chart. So even if this does push up, it may stall around for a little while until we get that 4-hour deceleration. And if we do, then I'll be looking for a pushback back into this structure, and then that and a flag, and that will give me the confirmation that this is ready to push higher for that potential longer term move. And then I'll be looking to get long rather, on the break of a flag such as this, or within it. And that's all I'm going to be looking for today, folks. I've done my best to get through this as quick as I can. I hope you've taken some value from this, and I will speak to you again soon. Thanks for watching.